of a new trading day, but first, let's go straight to our top story. The country's banking industry may recover to pre-pandemic level after 2022, but this will depend on the extent of the fallout from the health crisis. It's according to S&P Global Ratings. S&P says downside risks will dominate the industry, not only in the Philippines, but for the rest of the year in Asia Pacific, and recovery will be slow and uncertain. For the Philippines, it says credit losses have soared than it previously expected, given its updated forecast that the economy will contract 9.5% in 2020 compared to its earlier forecast of a 3% drop. Weak economic activity and tough employment conditions, according to S&P, will dilute the Philippine banking sector's asset quality, earnings, and capitalization over the next 2 years. But Bangko Sentral Governor Ben Jokno says the local industry continues to have sufficient buffers to weather the crisis. He says BSP stress test points to favorable banking system prospects amid the risks, noting that non-performing loans will remain manageable and liquidity will remain sufficient, profitability will remain intact, and the capital adequacy ratio will still be above the 10% requirement. All right, Dan, before we check on the banks, let's take a moment to register that the index finally broke through that 6,000 resistance. Tell us more about that.
Okay, Jess, I'm just opening the terminal right now, and I'm happy to report that we are staying above that 6,000 levels, albeit at a very flattish gain here. We are up by 0.06% in the first 4 minutes of trade. So trading at 6,022.87. So like you said, finally here, and you can see that on my terminal, we finally broke through this level that we've been waiting for so long, for weeks really. And this amid more news from the government that they are, of course, relaxing, let's say, the quarantine restrictions across the country. So first of all, we had the biggest gain in 6 weeks. Yesterday, we were up by 2.04%. We were also the best performing bourse in the rest of Asia. What happened yesterday? Well, the IATF of the Management of Emerging Infectious Diseases agreed to ease the movements of persons traveling between GCQ and MGCQ. So if you recall, Jess, bawal pa yung mga taga, GCQ areas like Metro Manila and NCR to actually go to the least stringent areas, such as, for instance, Davao. Right now, it's going to be allowed. Another thing that they changed was that the curfew will now be shorter. So that curfew is going to be just from midnight until 4 a.m. So really just 4 hours of a stay-at-home curfew. Now, what have analysts been saying? Obviously, positive impact for the economy. This from Japheth Tantiangco. He is, of course, from PhilStocks, reopening the economy further. Plus, of course, we had reported the timely approval of the budget. That may actually affect next year's, fiscal space to be able to address all of these challenges. Some of the ones that performed best, and I'm going to pull that out for you to see how they are performing this morning, were actually our mall operators. So you've actually got Ayala Land and SM Prime getting a boost. They were also given the go signal to have sales and other marketing activities, which will now increase their foot traffic. Now, another one, though, is saying that you might be seeing it up for a correction. You actually see it testing its 100-day moving day average already. And of course, investors are still very risk averse, and this might cap gains. This is a warning from Astro Del Castillo, who is at First Grade Finance. I just want to see that on the backdrop of how the rest of the equities in the globe are moving. And another thing that might be risky for today's trade is the fact that Wall Street had dropped overnight. You can see on my terminal here, S&P was the lowest in almost 2 weeks. That's, of course, as there was less agreements na naman on that stimulus package to be passed before November 3, which is, of course, the U.S. presidential election. Another thing, just global virus cases surpassing, get this, 40 million. So that's quite a lot. So, just a very quick peek here at our sectors. You had reported on the banking space. I'm very curious to see whether that's performing in the green, and it seems to be the case. Financials up by 0.2%, together with industrials, which is the best performer right now, up 0.6%. But you're going to be seeing properties and holding firms sitting out that rally.
But of course, we would want to see how the mining and oil counter is performing. That has been a superstar of the past trading days here. Is that soaring further in the morning's open?
Okay, very good question. It has been up for a correction according to some analysts, and it seems to be the case. So you're going to be seeing the counter down by 2.8%. But that, of course, follows a couple of days of a crazy rally, if I could say so myself. You've actually got
Mhm.
PXP Energy yesterday at a big wedge further soaring. That's, of course, after, the ban or the moratorium on exploration was lifted. PXP Energy has now actually said that they are already pursuing exploration talks with CNOOC. That's, of course, a Chinese energy player. Now, what is the latest in terms of this news? This from Energy Secretary Alfonso Cusi. The Philippines can actually proceed with this joint exploration without setting aside that 2016 arbitration court win over our, let's say, demand or ownership of the West Philippine Sea. He says that actually lifting this moratorium is part of an exercise of the Philippines' sovereign rights. So there are now 5 service contracts, okay, that were allowed to resume the
Mhm.
exploration work. They were already there now. So among them, as I mentioned, PXP Unit Forum Energy, that's SC72, that is in Sampaguita Gas. They already have 2.6 trillion cubic feet of gas, which they say is located na there. And this is the one, of course, that has talks with CNOOC. Another one is Nido Petroleum. That's contract SC54. You've also got PNOC, which owns part also with Nido Petroleum, and another one. But another thing that's very interesting here, Jess, is that there are bids going on. So apart from the fact that you've got the
Mhm.
ones already existing there has been a lot of speculation, according to some analysts, on Udena Corp, which is of course owned by Dennis Oy, to be bidding also for exploring there. There are 3 new areas that are under review. PXP Energy is also looking at that. Phoenix Petroleum, where Udena is a shareholder, rose by 34%. And this is according to Lex Azurin. He says that was amid speculation that a LNG joint venture with Sino could also lead to some exploration. But he does warn everything is speculative at this point. Another
Speculative.
one that is saying that we need to be cautious about this is Timson Securities' Darren Pangan. He says he was very cautious about this sudden surge in mining and oil prices. Of course, we still don't know, Jess, whether there is all of that, gas fields that really exist there, Jess. Now, nevertheless, let's take a step back. Let's take a look at the broader economy. We've heard it time and again, a contraction is expected in the full year, but a group is seeing a less worse picture, so to speak, in the third quarter. Why is that?
You really don't want to use the word better in this
Yeah,
case
I'm not
because
using better.
understandably it's still a contraction. It's still a contraction after all. Well, you have First Metro Investment Corporation and UA&P say, forecasting that at least for the third quarter of the year, contraction will be in single digits. To be exact, that's going to be a slump of 5%. That's coming, of course, that's a better outing compared to how we did in the second quarter. That deep contraction of 16.5%, and they alluded primarily, to the reopening of more sectors as lockdowns were eased, and for the most part of the country, like you were saying earlier during your market review here. And they are saying, there's really a sprinkling of positive news and less negative economic data suggesting, that the economy is past the bottom and is already gaining momentum. Now, according to them as well, there are some sectors that's actually going to lead that climb to recovery here. Primarily, have the industrial space, especially the construction sector that's due primarily to state spending on infrastructure being ramped up here, as well as a strong demand in the real estate space. That's despite the fact, that government spending on infrastructure was actually down by 25% in August to only 44.3 billion pesos. One other sector space that they are banking on is the manufacturing industry. They are seeing that to show some signs of improvement, but at a slower pace compared to the industrial space here. Recall that PMI improved to 50.2 in September. That's coming from that 47.3 in August. Furthermore, you have FMIC and UA&P, really hinting that there are already signs of normalcy in economic activity. They've seen significant improvement in the last 3 months, and that they are expecting that to gain traction. Especially, you have the government expressing willingness to ease restrictions further as we make it to the end of the year. In fact, like what you did mention, you have domestic tourism already opening up more. You have Baguio and the Delos region, in fact, already opening their borders to other tourists coming from other parts of Luzon, not just limiting it to Region 1. At the same time, you have, of course, our rail lines already increasing their ridership. And, of course, cities, like what you did mention, easing their curfews as well. But nonetheless, it's really a slew of contraction forecasts here for the country. In fact, we did earlier mention that S&P projecting GDP to slump by as much as 9.5%. There's Fitch projecting an 8% drop in GDP. But that's for the long term. This time around, in the near term at least, you have a GDP figures expected to be released by November 10. So that's definitely something that we are keeping our eyes on, Dan, especially investors as we try to await. Definitely the third quarter will be showing some signs of recovery at least.
It's so interesting how the projections are so far apart. You've actually got Bloomberg, economists here predicting 8.8% of a contraction. So it's a very, very big range. Jess, it's anyone's guess, as you mentioned, what's going to be happening on November 10th.
Now, here are other headlines we're keeping our eyes on. Staggered work hours could likely ease the burden of limited public transportation. That's according to Trade Secretary Mon Lopez. Lopez said the department is set to release a circular directing companies to allow their workers to report to work at various times to reduce crowding in public transportation, especially during rush hour. With businesses reopening, government officials note the need for additional means of transportation for commuters. The government has since increased the allowed capacity in several businesses, including dining restaurants in areas under GCQ. A proposal to allow mall-wide sales in GCQ and MGCQ areas has also been approved as a way to drive consumer spending and get the economy up and running. Now, workers from the auto parts industry have asked the government to set aside part of the auto incentives program budget to fund social amelioration initiatives for displaced workers. They are also opposing the industry's request for an extension in the compliance period for the Comprehensive Automotive Resurgence Strategy, or CARS program. This program offers fiscal support to car companies that can locally produce 200,000 cars for 6 years. Recall that Toyota Motors Philippines is appealing for an extension of their compliance period after the Taal eruption and the subsequent pandemic slowed production. But the Philippine Metal Workers Alliance opposed this, claiming that relief for the automakers would simply incentivize them to lay off workers and rely on imports rather than expand domestic production. The group says unless the government wants to subsidize job losses under the current economic crisis, there is no point giving in to pressure from corporate interests to extend the grace period under the CARS program.
The government is looking to raise 3 billion pesos. That's from a planned issuance of one-year premio bonds next month. National Treasurer Rosalia De Leon said the Treasury is planning to roll out the second tranche of its premio bond offering next month. Last December, the Treasury sold close to 5 billion pesos worth of one-year premio bonds. Each 500 peso investment carried quarterly coupon payments, as well as a chance to win condominium units or house and lots, and as much as 1 million pesos in cash prizes during the quarterly draws. Both De Leon and Finance Chief Sonny Dominguez had earlier hinted that prizes for the second tranche would be bigger than the ones offered during last year's issuance. From safe haven to underperformer, the property space has felt its share of pain from the global pandemic. But with the economy set to reopen, is it time to be hunting for bargains? Now, here to share with us their updated outlook for the rest of the year, we have with us David Leechiu. He is the CEO of Leechiu Property Consultants. Good morning, sir, and welcome to the broadcast.
Hello, good morning. Thank you for having me.
David, what has changed since your quarterly report? I mean, the last time you were here, is the sentiment, this is a very easy, difficult, but very blunt question. Is the sentiment generally better or generally more cautious?
So it's divided. So two big things happened. So the first one is that the BPO sector continued to grow. And I'm happy to say that year to date, we've consumed something like 300,000 square meters of office space, new leases. And that's totally unique to the world because nobody is taking on new space in almost every country. If you compare that to the US has shed 4 million square meters of office space in just most of that in just the last 4 months. So we're going to keep growing in terms of demand for office space because of the BPO sector primarily. And then the second event that happened, of course, was the how the Bayanihan Act has impacted the POGO sector because
Okay.
you know we brought in the Bayanihan Act hoping that we can generate more revenue from the Pogo sector, and they reacted by pulling out. And so they are shedding an alarming amount of space in the last 3 weeks, 4 weeks. And I think that as much as 16-17% of all the office space that they occupy will be shed this year. So between now and December, they're probably going to shed another 250,000 square meters of office space.
Okay, David,
So
since you're on the topic of POGOs, I just wanted to
yeah,
clarify what's the difference between the POGO projections of a flight pre-pandemic, wherein the government has repeatedly warned that this would happen anyway. I think you, if I'm not mistaken, you said something that we needed them for 3 more years, diba? But you would expect them to start going away. What's the difference between that story and this story right now?
so two sides of the coin, right? I'm not siding or making conclusions, but one party, which is the government, says we have to tax you more, right? Or you have to pay the same amount of tax at the very least as local corporations. And then the other side of the camp is saying, uh, you're changing the rules of the game with us. You attracted the pogo sector with with a particular tax platform under PAGCOR, and then halfway through we moved from PAGCOR to insisting that these tax laws should be like this. And then, of course, there's the China effect, where China is trying to clamp down on the industry globally and how that was going to impact us. But if you look at the series of events, the the contraction in the pogo sector followed immediately after the passing of the Bayanihan Act.
Okay,
So you can
interesting.
safely say that they're correlated.
Okay, it's the drop of water that broke the rock, so to speak. Now, let's talk about Pogo or non-Pogo. Now we are in a GCQ, some are actually in MGCQ. So you can say that, lockdown restrictions are generally easing. Is the recovery, if you can say that, for the property sector set for a quick pickup once a vaccine is in place, once lockdowns are no longer there? Or is there actually a lasting change in behavior? Work from home, movement to provincial areas, e-commerce really replacing the traditional malls and retail
Yeah.
spaces.
So first thing is that I think a lot of people are revisiting work from home, and they're surprised at how well it has worked for many companies. And I think part of the reason there is because during this calamity period, during this global COVID crisis, the workload has been cut significantly, maybe half, maybe two-thirds. So we are able to work from home and cook and attend to our children and to our relatives because the workload has been reduced significantly. When we go back to normal, which I think we will do so rapidly once the vaccines are out. Um, I don't think I don't think normal people will be able to do work from home at 100% capacity and still take care of the things that happen in the house and still keep their sanity. So one of those things have to give. So people will migrate back to the office. The second thing is that I think if you believe that there is corporate fraud in the Philippines, and it's everywhere in the world, but also in the Philippines, a lot of those things are happening right now that we just don't know about. And
Okay.
the only time the corporations will figure that out is when you complete the audit. And so The other change of behavior is the many companies now, because of their experience of work from home, are going to toy around between doing 80% on-site, 20% work from home, and shifting people in and out. So maybe most people will do 3 days office, 2 days at home. So that's one of the things that people are experimenting on today, post pandemic.
Okay, now David, before all of this happened, we actually saw property prices at an all-time high, diba? And even property stocks at an all-time high. To what extent is this related to, capex spend that had not been spent anymore, or that might be now shelved? And to what extent is it still related to a general demand of office spaces, like you say, from BPOs, or residential spaces where these aren't yet fulfilled? And to what extent can we expect, if a rebound does happen, for us to go back to those pricing levels, or will they be consolidating or normalizing?
Yeah, so 7 months into the lockdown, there have been very few distressed sales. So we're seeing more and more distressed assets come online, but the base of that is very, very low. So maybe from 2, 3 assets, we're moving to 10 assets as we go into the 8th month of this pandemic. The condominium sector on the low end has been hit hard. The middle end are trying to hold, but they're softening now. The upper middle has been holding for a long time. It's only now that they're starting to soften, but uh, but the high end has been very resilient. And so depending on the segment, things are either holding or softening. I expect a very strong recovery post pandemic when people are out in the streets again, and you're seeing that now because interest rates are crashing. The Philippine government, as you know, has picked up 10 and 25-year money a month and a half ago at record low prices. And most importantly, the spread between 10 and 25-year T-bills are paper thin. What that's going to do when the banks feel comfortable lending again is that it will produce a significant drop in interest rates. But not only that, we will start to see a mortgage market emerge in the Philippines. A mortgage market means that you can borrow 10, 20-year fixed interest rates uh, for single digit numbers. Right now, if you want to borrow 10-year money, it will cost you 10 to 11%. 10 to
Okay.
11% per year, which is very prohibitive, and that's going to change. And when that happens, you're going to see a dramatic recovery in the housing market across all sectors.
And while we're on that topic, what is the catalyst that needs to be happening here for the loan growth to pick up? Because the easing has been happening since last year and even pre-pandemic. And why is it that the banks have not yet had an increase in terms of property loans?
They're holding back. They're holding back because they see the economy to be too fragile to be lending aggressively. And the big borrowers are primarily in the property market, and they're very concerned about the impact of this COVID crisis. And they feel that they haven't seen the worst, and maybe because they're seeing the foreclosures in cars, they're seeing but they haven't seen the foreclosures in property build up significantly. So I think they're holding back right now until things are more predictable. And as we open up the economy, tourism is getting is feeling it better. If you look at the high end market, uh, Punta Fuego, Tali, and Kawayan has been unique. I don't know if many people know this, but these three geographies, the coastline of Batangas Bay, is unique because property prices there today are higher by 50% compared to February of this year. So people are at a buying spree in Putafuego, Tali, and Kawayan Cove, and that's what's happening. And I think over time that's going to spread across the Philippines. Tourism will be a big factor, and I think a lot of people who are kind of going crazy in their house right now will want to do everything they can to get out.
Absolutely. David, last question here. In your presentation, you said that the GDP contraction does not equate a drop in property prices. All eyes are on the third quarter print and even, possibly more than 8% contraction for the full year. Why is that? Why are you not worried that this has a direct effect on one of our biggest sectors here? And why do you think that consumption will still be, buoyed in your space despite the contraction in our economy?
Because much of the economy is outside the Philippines, and we can't mess that up. It's hard for us to mess it up. We can mess it up a bit, but not meaningfully. So overseas remittances will still flow, regardless of what happens to the Philippine politics or economy. The BPO sector is growing because the whole world is melting, and as the world melts, more jobs can be created in the Philippines. And third, and most importantly, we have to thank the DOF for their amazing fiscal management, because that has produced record interest rates, that has produced an upgrade. We're probably one of the very few, if not the only country in the world that got an upgrade, credit rating upgrade during the pandemic. And that's why I think we're going to have a strong recovery. There is also a lot of liquidity inherent in the system, and the government is doing many things to increase that liquidity without additional borrowings and without FDIs. It's just a matter of efficiency. And the one thing that's going to drive that, or to complement that liquidity, is the amount of infrastructure that we're going to enjoy in the next 12 months. 12 infrastructure projects are going to be completed in the next 12 months between trains, roads, and airports and bridges. And that's going to be extremely transformational for people. We will drive around into a new Philippines when we get out of our houses very soon.
Okay, so basically waiting in the wings for those monetary policy easing to actually start and take effect and start seeping through to our own pockets. Thank you so much for those insights. That was David Leechiu, CEO of Leechiu Property Consultants.
Thank you.
And that's a first look into the business day. Today is October 20. Catch us again tomorrow morning, 9:30 a.m. I'm Danie, Laurel, and we are One News.